Good morning, everybody. Happy Friday. My name is Gareth Soloway, and this is my trading game plan for the day today. All right, so we're here at verifiedinvesting.com. I do welcome each and every one of you new viewers. We're going to get into the charts. Remember, it's pure charts, no BS here at verifiedinvesting.com. The ES futures are trading fractionally higher. Yesterday, we saw the same thing. The markets opened higher, sold off until about noon, and then went into their light volume float, eking a flat to slight positive day out of the markets when all was said and done. That seems to be honestly what we're seeing more and more. We're seeing the gap ups, then the fades, which is institutions generally feeding into the retail buyers using the exit liquidity. Then they shut off the faucet around noon and the markets float right back up. All right, let's take a look at the charts and see where we are. The S&P futures, you can see again, overnight, we were floating up, and then interesting to see this turn right here, right at 6 a.m. Like, look at this, guys. This is no kidding, like right there. That is exactly at 6 a.m. Eastern time. And this is how you know that there's some institutional involvement, right? Mom and pops don't say, hey, listen, it's 6 a.m. Let's start selling the S&P futures. That is institutional algorithmic trading that's been pre-programmed into the markets right there. Now, the markets have faded. Now, if we look at where we were at yesterday's close, we were right here. Look at the low right here that we went to. We went back to the flat line on the S&P futures, and we saw a little bit of a bounce. Now, coming into the open, like I said, we're basically flat to positive, meaning that this is where we closed yesterday, and this is where we're currently trading right there. But fascinating. Isn't that amazing to look at? You know, again, I always point these things out because these are the things you're not going to hear on Bloomberg. You're not going to hear on CNBC. You're not going to get it from any mainstream media type outlet. We're talking real hardcore technical analysis here beyond the glossy stuff that is made into the TV side of things, right? This is the hardcore data reveal. Okay, let's get into the S&P 500 here. We take a look at the daily chart and look at where the daily chart sits. So yesterday, again, you can see on the daily candle of the S&P, we opened higher, we sold off, we went negative, and when we came back, we closed flat to positive. The S&P 500 was up 4 points yesterday, or 0.06%. Now, notice we have this trend line right up here, right around 67.50 or so. That is your upside limit for the markets before they break that key level. Okay, and just going back, I always like to show this here, but look at where we sit. So we take the October 2023 low to the correction that we saw, which was a 16% drop here in August of 2024, smaller correction in January here of this year, and then all of these levels, we come back right to this hit here, and we're right nearing that. We haven't hit it just yet, but that's the level to watch. Then, so that's our upside, right? We always talk about upside, but then downside as well, because a good technician, if you're hardcore technicals and you're ignoring all the social media that tries to draw you in, they try to get you to react emotionally. They try to get you to flip right at the point where you should be sticking the course. That's what emotion does to us. And now with social media and all these, Fox News and CNNs and all of these other, it's all the same, folks. It's all the same. It is made to trigger you emotionally. I always say this before, but I want to say it again, is that don't forget that every news media outlet, right? What do they rely on? They need you to watch, because when you watch, what do they get to do? They get to stay in business. If you didn't watch, they couldn't sell TV ad spots. Ad dollars are what keep them going. So they have to report stories that are going to get you like on the edge of your seat, that are going to get you riveted to watch. Oh my goodness, this is happening. That's happening. Block it out. If you're a true technician, block it the hell out, because it's not going to help you when it comes to trading. In fact, it's going to get you on the wrong side overall. The key is the charts. Not that the charts are 100%. I certainly have my fair share of wrong calls, but do I have more good calls than bad calls? And the answer is yes, because I block all that nonsense out. All right, going back to the charts. On the downside, right? So we just looked at the upside. Upside 47.50 is your upside trend line. Your downside support level is 67.50 is your upside resistance. Your downside support is around 66.30 or so, right down here. So that's what you're watching on each side. Which way do we break? Again, these two lines are converging. So at some point, markets are going to be forced out of this range. But again, we have to watch and see. The technicals will tell us once we see confirmation in one direction. Here's that infamous trend line going back to 2020, the COVID lows. We are piercing it on the weekly chart right here. We're going to watch and see, where do we close today? And then do we confirm it next week? Let's watch very closely, but we are piercing this on the Nasdaq 100 chart here again as of yesterday's close. The Nasdaq was stronger. The rally in semiconductors continue to keep the market afloat. We've seen again Nvidia hitting new all-time highs, not by much, but just inching up, making new all-time highs. Today it's flat to positive again. But interestingly enough, Nvidia's into a major level as well that I want to show you right now. So let's take a look at Nvidia, guys. Look at this. Look at this trend line on Nvidia. This is your bull market high, okay? Bull market high from 2021. Notice, why is it a major pivot high? Because you had a significant amount of grind up into that high and a significant amount. So it's basically a mountaintop. Now, compared to these, it doesn't, I mean, this is like a hill compared to the Rocky Mountains or Everest, right? But ultimately, over here, this would be considered a major pivot high, the 2021 bull market high. Then you have this high here, which is obvious, kisses it right here, tags it right here, and we zoom in, and look what we have right there. What did we tag yesterday? We tagged that trend line right there at around 191. So on Nvidia, we are watching like a hawk. Does it get through this line, or does it cause a rejection? Last rejection after tagging it right here, we saw a pullback from about 184 down to 164, about a $20 pullback, not a huge drop. Over here, though, much bigger. These were much bigger corrective moves. So we have to follow this and see what is going on there. All right, quickly reverting back to the US dollar. Nothing really new to report here. The dollar remains essentially between support around this 96.40 level and resistance around 98.60. So 96.40, 98.60. Those are your two levels. Again, notice how this line, we did pierce it, and then we came back in. And notice how we reestablished. And this is something that every technician needs to monitor. So right here, this wasn't really a big level. It was just a high pivot, right? It didn't coincide. Well, I guess you could say, you drag it over here. It does kind of coincide over here as well. But the point being is we got above and we came back down, and then we came below, and look how it reestablished itself, showing that it has teeth. And then look at that right here. Boom, right back down. And then you have your support down in this lower range as well. So really interesting stuff on these charts here, guys. Even though the dollar isn't doing much, it still is intriguing as a technician to monitor. Here's your daily 10-year yield, or excuse me, your weekly chart on the 10-year yield. And again, this is the interest rate on the 10-year. So it's obviously important for us. This is one of the major driving forces. It is still hammering on this longer-term trend line right here. What's going to happen? Are we going to break? If we break, watch out below. You probably head down to about 3.6 to 3.3, right in this vicinity, but still holding on to that key level there. Now, yesterday we had some big moves. Tesla, big reversal day. That is what we call in the business a reversal engulfing candle. All right. So again, anytime you see a gap, so number one, you have to have a long trek up. So you don't want to have it like if we were higher over here, right? And then we just did that, then that's not a reversal engulfing candle of significance, because again, it's not a recent high. Here, we look at this. The last high was in December of 2024. Basically, my metric on the daily chart is 6 months back. If 6 months back, it's the highest point, then it's significant. Gaps above yesterday's high or 2 days ago high and closes below the low right here, and therefore it is a reversal engulfing candle. Now, we are getting a bounce in it today, but this would put me as a technician on high alert. All right. Basically, as long as you do not have a daily close above this high, this is a bearish signal. Okay. Now, notice how I said, listen, if you get a candle, a daily candle that closes like up here, well, then this is totally crossed out. It has no impact. It has no bearings on technical analysis anymore. But as long as it stays inside of here, even with the bounce today, it's going to open right around here today. This is a bearish candle. And so I point that out because, listen, I've been bullish on Tesla. We had this beautiful, I mean, it was absolutely gorgeous this wedge pattern, right? This was one of those infamous wedge patterns that was just a thing of beauty. And you broke out, you retraced, and you went up, up, and away. But now we have a bearish reversal signal. All right, I talked about in the title of today's game plan, I have some shorts and I have some stocks that I think are still great long opportunities or buying opportunities. I want to show them to you. My premier, and basically what I'm doing is I'm giving a month. I'm giving approximately a month. Like, so basically the month of October. What would I short? What are my top shorts for the month? What are my top longs for the month? Let's reveal them right now. Let's get into it. So my top short is this one here. This is Robinhood. A lot of you guys probably have Robinhood in your portfolio. Great job if you have. It has gone parabolic. Again, amazing. They're getting into the gambling side of things. They've been in the crypto side. They've been on all these sides. But the charts are the charts. The stock, again, has rallied just since April low, a whopping 400%. Let me say that again. 400% move since the April low. There's also from the April low this amazing parallel channel. And what are we doing? We're just kissing the upper end of that. And so, listen, this could still remain in an uptrend, and it could still correct all the way down to like 115 bucks, and it would still be in its uptrend. And so, for me at least, this is a great short for October. I'm looking at this one. I think it's coming back down at least to 115 over the course of the next 4 weeks. All right. Another one that I think is due for a continued correction, APP. Take a look at this. You had this blow off top here touching 745. It's now starting to curl over. Watch this one, folks. I think this one comes back all the way in to the $500 level. I don't know by the end of October. That might be a little excessive unless the stock market really corrects. But this one should have a big corrective move. APP is the symbol on that one. And then other ones as well. Caterpillar, amazing here, folks. Take a look at this. So we have this upsloping trend lines. These are some old trend lines that I've been tracking on it. But look at this trend line right here. All right. So basically, if we go here, look at what we just tagged. All right. So we're essentially using, I don't even care about this little area right here. That's inconsequential. More than anything, it's these highs all through here, connecting right to here, and yesterday's high pivot. And this is Caterpillar. So again, you know, the reason I think it's done so well is because the idea is that these data centers and the build out, but in essence, we know the U.S. economy is slowing. And if the U.S. economy is slowing for construction, that's not going to be a great thing. And I would anticipate that you're due for a corrective move on Caterpillar. All right, couple charts before we get into the longs. You have to love this, folks. Here's a rollover starting on JP Morgan Chase. Amazing move to the upside. I want to show you guys this, right? So what you have on this chart, look at this. We have this high. We drag it to the recent highs, and we drag it down. And look at that. Do you guys see what I just did? So we're using the high pivots from February of this year, connecting it through all these highs here. And look at what it shows us. It gives us points of credence all along here. This should come back in the next few days of next week, or let's say next week. I would expect to move back to 295. If it breaks this level, if it breaks this 295 zone, then you're going to get your bigger correction, right? But as of now, this would be your technical support at 295. One of my favorite longs continues to be the VXX. Look at the wedge pattern. It's knocking on a breakout zone, guys. This is the volatility ETF. It tracks volatility. Volatility has been sustained at levels that generally do not occur very often. So we're looking at a potential breakout of a wedge pattern here. Look at the downsloping tightening wedge, slowly getting tighter and tighter. And notice again, you get a break here with confirmation. I think this goes back north of 40. It's currently trading as of yesterday's close at 33.40. This morning it's at 33.22. Look for this to head back to 40 in October. All right, let's get into some other longs here. The longs that I have are based off of this. It's not Pfizer. I still think Pfizer goes higher, but Pfizer has had its rip, right? It's, again, had an amazing move. Drug stocks are all the craze now. We're seeing money flow coming into drug stocks here, guys, and that means that I'm starting to scope out stocks that are still beaten down. One of my top picks here, look at this. It's just starting to wake up. It's SRPT. You have this beautiful pattern. You could almost make a case for an inverse head and shoulders right here, or a cup and handle pattern. It's beginning to go. I think this goes back to $35, $36 in the month of October. Viking Therapeutic just beginning to start to inch up. Same sort of thing. Look at the pattern formation. All right. Down move, up move, consolidation, beginning its breakout. My guess is this is heading at least to 32 in the near term, maybe gap fill, but that would be a stretch unless this sector really gets caught up in the craziness. Now, listen, is it that drug stocks should be going nuts? The answer is, well, they are beaten down. Most of these drug stocks are at 52-week or multi-year lows. Certainly Pfizer was, and it paid a 7% dividend. It was like, in the trading, I have this in smart money stocks and ETFs, and I've held it for multiple years, actually. We're basically flat on the entry price, but it's been paying us 7%. 7%. It's just a beautiful thing. And so I'm like, at these levels, you just hold it. 7%, it's going to pay me. I can't get that on a T-bill. I can't get that on a bond. So, let me get that in Pfizer that's already beaten down. But the idea here is that all the stuff is running, right? We saw AI pure plays run, then data center players run, then software AI plays are starting to run. All of the things down to the point where we're even seeing other tech stocks starting to run. Heck, supercomputers. Everything is running. What hadn't run yet and hasn't really run yet is pharma plays. It looks like the White House is now warming to these pharma plays a little bit more. They're striking deals with manufacturing in the U.S. Money flow is going to say, wow, tech is ridiculously expensive. Where am I going to park my money? And it looks like pharma and drug stocks are the place to be now. All right, now listen, this isn't a long-term trade for me, right? Let's be clear. Pfizer's different because it pays a 7% dividend, but if that gets up a little higher, at some point I'm going to say, all right, well, now it's getting rich. My money can be spent better other places. But some of these other ones, these beaten down ones, those are the ones that are lower market cap, 5 billion, 7 billion, 2 billion. Those can go parabolic in this environment that we're in. All right, let's get into Bitcoin, guys. We talked about a breakout on Bitcoin, and Bitcoin has done just that. Look at this move, closed above, confirmed. Now it's game on here, folks. So listen, this now becomes major support at 118,000. Bitcoin, my guess, up here to this level, you're going to head to about 126 to 127. Then it might struggle. Now, if by chance it doesn't make a new all-time high, that's a warning sign. Like basically everything is pointing towards that likelihood. If it doesn't and it breaks back below 118, that would really raise alarm bells to me. So again, it's not a high probability that that happens, but remember, when dealing with technical analysis, everything is probability based. So even if we're like, oh, there's a 80% or 70% chance we go to 126, 127 on Bitcoin, it still leaves 20 to 30% that it doesn't. And if that happens, what I've learned in technical analysis from literally 26 years of trying to learn this stuff and finally getting more proficient in it to the point where I can teach you guys is that the biggest moves come from failed moves. All right. Meaning that when you have a breakout and all of a sudden it fails, it usually just doesn't fail by a little bit. It fails by a lot. And I stretch that all the way over to the stock market too, right? If the Nasdaq gets above the Nasdaq 100, gets above and confirms above that level, but then fails, watch out below. When bullish patterns fail, there's usually massive drops. When bearish patterns fail, there's usually major spikes. Because honestly, what happens is a lot of people get caught off sides, right? And then they have to quickly correct, which causes an outsized move in the opposite direction. That's the psychology behind it, really. All right. So that's Bitcoin there, guys. Let's take a look at gold. Gold had a small pullback yesterday. Look at where it went. And this is just proof in the pudding of what I teach, the confirmation signal. Closed above, confirmed. And then what do we know about this trend line here? It becomes major support. And so what happened yesterday? Gold flushed, kissed that level, and bounced right back up. That's case in point, the confirmation signal solidifying the support level. And that's what we're seeing. So gold is moving higher here today. Now, same thing applies. If gold were to fail and still break below, then you're going to get a bigger correction most likely. But right now, again, gold showing signs of life, and that's continuing to power. Silver. Silver hit my low end of my first target at $48, right? 48 to 50 has been my target that I've talked about here. It did hit that yesterday and pulled back. Today it's pushing up. I still think silver's going higher, guys. I still have my upside potential. This would be my max move to about 50.75 or so, connecting your 1980 high to your 2007 high, 2011 high, excuse me. But that would be your max. But really, I'm still thinking 50 to 51 is likely where we're heading before we get a significant pullback. Eventually in this bull cycle, I actually think it goes as high as 60 to 62, but I do think you're due for a pullback. Like if you get to 50, 51, I think you get a good 5, 10% correction, consolidation, and then maybe that next bull move comes in. Let's look at oil, which filled a major gap yesterday. Let's see where it is today, folks. Is it bouncing off of gap fill? Yes, it is. Not a big bounce, but you can see right here. There's that gap fill right here. There's the pivot support. And look at that, hits and gets a small bounce. Now, this is a pretty nasty sell in oil. I mean, this is a new low going back to May, the last time we were down here. If this breaks, we're going to 55. That would be your next major target. But right now, support is holding on oil. Now, look at natural gas. This was fascinating yesterday. So nat gas rallied up. I was doing research yesterday on my own YouTube. I did a video about natural gas, a deep dive, and I found these two trend lines, and I found it, and all of a sudden price goes there and reverses. And let me show you where this comes from, because this is the stuff that like literally makes me wake up every morning excited to trade and invest, finding these levels. So you have these levels here, right? Can right through here and right there, and then look, high pivot, kisses there, and price gets right there and reverses. Now, a lot of people would call this a topping tail. I don't consider it to be, because you have to go 6 months back, and it has to be the highest point 6 months back. And you can see right here, that's not the case. So again, it's not really a good quality topping tail, but is it still a reversal on nat gas? Yes. I am definitely not shorting it, though. I told you guys this yesterday. Natural gas, when it moves, it can move massively. So I don't want to short this. But still, it gets my attention as a technician, and I will continue to follow it closely. Amazing stuff, guys. Great job today. I love you guys tuning in. The government might be shut down, but I certainly am not. I am here to just give you guys everything that's in here. Listen, sometimes it's worthless. Sometimes it's gold. It's just all going to come out. And that's what you get with me here at my trading game plan. Is what am I seeing today? What am I looking at? What is important to me? What are my buys? What are my shorts? What are my levels? All right here in my trading game plan. Now I'm going to go to my trading room and go trade this market and try to make some good quality decisions to make some good quality money. You guys have a great one. Thanks so much for tuning in. Thank you for your likes. Don't forget to share with your friends and family if you find this helpful. I love you all. Have a good one. Take care.